Good morning, Facebook friends and YouTube friends. Give me just one moment and we will get started shortly. Okay, good morning. Thank you very much for your time this morning. This is a follow-up webinar to the ones that I do weekly on Wednesday, teaching people how to access down payment assistance programs and grants with very little money out of pocket. So this is my credit building or credit boosting webinar. So today we're going to focus on what do they look at inside the mortgage world from a credit standpoint, and more importantly, how can we use those different tools that are in our tool belt to get a quick spike in your scores and manipulate the scores, for lack of better words. So with that being said, I'm going to just jump right into it. So who is today designed for? It's designed for people whose credit scores are roughly in that 500 to 600 area. So if your scores are below 500, we probably need to do more of a one-on-one coaching. So please do not hesitate to reach out to me. In fact, let me put my link for my calendar. And here it is in the chat box. That's nodownpaymentrequired.org/book. That's a direct link to my calendar. So regardless of what your situation is like, if you are looking for some credit help in order to access some of the down payment assistance or grant programs I help connect people with, by all means, schedule a call with me. Always happy to learn your situation, put myself in your shoes, and basically coach you up to the point where we can get you approved for some of the money that's out there to purchase a home with very little money out of pocket. So if your scores are, up there in the higher 600s or even 700s, I don't know that you'll get a lot of benefit out of this, other than there's some good educational content that might help you going forward. And, maybe you can pay it forward like I try to do for the people that need the help. So also, if you don't have any credit scores, we're going to give you some tools to help you build those credit scores very quickly. And I try to answer some of the serious questions that really trip people up on a credit standpoint. And that would be more, how do we deal with bankruptcies, repossessions, and collections? And I find that collections are things that really trip a lot of people up. Naturally, people think paying the collections off is going to bump your credit scores, and that's not always the case. And I'll go over that in a little bit more detail shortly. Or just anybody that wants to understand the mortgage world and how credit applies to it and the different hurdles that you can possibly run into. So why do I do these webinars? Well, right now, the rental market, in my opinion, is absolutely out of control. I mean, what I hear for what people are paying in rents right now is almost criminal. Right now, I'm located in southeastern Michigan, and we are watching two-bedroom apartments just surpassing the $1,350 a month. And that's not anything extravagant by any means. So if somebody would have told me that 5 years ago when rents were closer to $1,000 a month, I never would have believed it. But here we are. And there's no end in sight. They're actually forecasting rents to increase 5% a year over the next 5 years. So, and with the shortage of rentals that are in the marketplace and the lack of new rentals coming online, I don't see any reason to doubt that. So I tell people, don't be surprised in 5 years if we're looking at $1,700 a month for a 2-bedroom apartment. So my goal is to give people as much education as possible so we can tap into a lot of the down payment assistance programs and grants that are out there so we can get out of this renting rut, as I call it. So also, I like to make sure that people have the correct information. There's a lot of misinformation out there with regards to what to do to get your credit scores up. No shortage of companies that want you to part with your money to pay for their services to help get quick spikes in your score. A lot of those things you don't need anymore. There's so much technology, free technology out there to help you challenge things on your credit. I don't think the credit repair companies are worth it right now, unless your scores are maybe below 500, and then there might be some temporary value in my mind. And I also find that there are a lot of people that are overpaying for those services. So for that reason, I find that these webinars create a lot of value for people. So my goal for you for the short term is to teach you how to get your credit score up 60 points in 60 days. Actually, if you implement some of the tools that I have today, you're going to find it's not uncommon for you to get people's scores up 100 points in 60 days. So we're going to show you how to identify areas on your credit that are ripe for quick impact in getting those credit scores up, help you add new credit if you have what they call a thin credit profile. Now, most of the lenders, in order to tap into the down payment assistance and grant programs I help connect people with, they want to see that you have a couple of trade lines out there. And a trade line is just a line of credit, whether it's active or something that's paid off in the last year or two. They want to see that you have a couple of things. So if we need to add trade lines, I'm going to show you how that can be done. And like I said, we're going to teach you how to find those areas for quick impact. And we're going to give you a timeline for each one of the things that I tend to tell you. I'm going to tell you how long it's going to take to actually populate and show up and affect your credit scores. So, because I find that a successful timeline is very important, especially when people are navigating out of that rental environment. Now, why do I do this? Well, as you probably have heard, or if you haven't been to one of my other webinars, I tend to specialize in connecting people with different down payment assistance programs and grants. So there is no shortage of money that's out there. And I'll give you a link to a new app that's just launched on, we just launched it on Google Play, and it just went up on the Apple Store yesterday. And that is our no down payment app. So if you actually go out to the Apple Store or Google Play, you will see these. I think it's actually should be under no down payment.app, no down payment app. And on that app, if you download it, you can actually enter an address and you can tap in and see how many programs are available for that specific address. And the database actually taps into over 2,500 down payment assistance programs, grants, and tax credits across the country. So we're pretty proud of it, very excited for it. So we just came out of the beta test, and we are trying to get that ramped up in as many users' hands as possible. We have discovered that on the Apple Store, it's easiest found if you use our parent company, which is Own the Roof. So if you type in Own the Roof, you'll see our no down payment app, and on the Google Play Store, the no down payment. So great tool, very excited about that. So it's certainly nice to see the amount of people that have been rating it and giving us the good feedback that we like. So please, if you could do me a favor, download that app and give us a quick 5-star review. Gosh, I'd really appreciate it. We're really trying to push that out to the masses. So with that being said, let's just jump right into it. So what I want to do first is I want to go over what they look at in the mortgage world, okay? They actually look at the 3 big credit bureaus: TransUnion, Equifax, and Experian. So there are more credit bureaus out there, but those are the big boys. So what they look for in the mortgage world typically is they want to see your middle credit score. So whichever of the 3 bureaus has that middle credit score, that's what they're going to focus on. They're not going to average it. There are some programs that are servicing that will average it, but in the down payment assistance and grant world, it's always the middle score right now. Okay. Ideally, when you're looking at credit scores, because there's a lot of credit scores out there, a lot of algorithms that generate credit scores, typically in the mortgage world, they're looking for the FICO scoring model 2, 3, 4, or 5. Okay. So if you go out to Credit Karma, it's not going to be that credit scoring model. It's going to be slightly different. FICO, I think, does offer Experian offers the FICO scoring model. I'm going to go over the different free platforms in a few minutes that you can access to get a copy of your scores. I'm all about using the free stuff. So I think there's enough tools out there that you can really get a good handle on your credit accessing all the free channels that are out there. So the scores that we typically ideally want to see, we want to get your scores to that 600 to 640 mark. Okay. We do have access to some programs that go into the 500s, but I find if we can get your score up to 600 or higher, the opportunities start growing exponentially. Now, most of the creditors that you have are only going to report to one or two of the three credit bureaus. So don't be surprised if you have, let's just say, a Ford Motor Credit. They're only going to report to two of the three credit bureaus, either Experian, TransUnion, or Equifax. And the reason that is the creditors actually have to pay to furnish that data to the credit bureaus. So it's rare that a credit is going to report to all three. Now, credit building tools are the exception. If it's a good credit building tool, they will report to all three. Okay, so if you're ever signing up for a credit building tool, be inquisitive. Ask, and hey, how many credit bureaus are you reporting to? Sometimes they only report to one, sometimes two, but the good ones are reporting to three. Okay. And we want to look at your credit bureaus and isolate different opportunities where we can get a spike on that middle credit score. Okay. So for example, if your credit scores are, 500, 550, and 700, we're going to focus on that 550 to get that up above that 600 mark. We're not really concerned about the lowest score. Okay. Unless it's got some serious collections on it that the other ones don't. So, but for the most part, we're really going to be hyper-focused on the credit scores first, and then if there's any baggage on there, we can deal with that on a case-by-case basis. Okay, so every once in a while, we'll get someone with a good credit score, but they might have had a trip. They might have been tripped up somewhere with regards to a late payment, and we need to work on that a little bit and find out why. But credit score is really the main driver. Now, what goes into a credit score? Well, no surprise, payment history is the biggest component of what goes into a credit score, particularly the last 12 months of credit history, okay? The credit industry, or I should say how the mortgage world looks at credit, is changing. And that's typical anytime the market starts to change a little bit. I'm finding that credit is tightening up a little bit. What used to be a very easy, predictable credit scoring model is changing a little bit. Not so much for the down payment assistance programs, but more in the mortgage world. I'm finding that some of the algorithms are changing a tad bit. I have some people with very good credit scores that are having challenges getting approved for conventional financing with little down right now. So they're naturally gravitating over to different types of financing that I tend to work with. So I'm seeing a shift going on right now. So 35% of what goes into your credit score is based on that payment history, specifically the last 12 months. If you do have any late payments, hey, it's not crazy to pick up the phone and call the creditor and say, hey, I didn't realize this. What happened? Any chance you could remove this? Typically, the first person you talk to in that call center is going to say, I'm sorry, sir, it was late. That's what it is what it is. We're going to have to, stand by that. And, I always tell people respectfully, say, you know what, thank you. I appreciate your time. Can I speak with a supervisor? And so sometimes you may have to do that one or two times, because as you go up that ladder, they do have the ability to possibly reverse any late showing up on your credit. Now, I always find it's better to kill them with kindness than anything else. So now keep in mind, you are their customer. So they want to try to make you as happy as they possibly can. And if it's an isolated incident, you can get it removed. I just had someone a couple of weeks ago, actually called Toyota and had a 60-day late on Toyota, and they were able to get that down to a 30-day late. So, and now that it's only a 30-day late, and that was the only thing late payment on their credit, we were able to get a good letter of explanation, and boom, we were able to get them approved for a down payment assistance program. So don't be shy. It's worth the phone call. Worst they're going to say is, sorry, we can't do it. But I will tell you, people are pleasantly surprised. And I would say that works about a third of the time. Okay. One thing I do tell people is, if I'm going to say this a few times today, please do not blindly pay off collection accounts. It does not always help you. And I'm going to go over that in detail. I mention it now because I really want to hammer that home. Collections can trip you up if you pay them off. Credit utilization. 30% of what goes into your credit score is credit utilization. And this is a very easy place for us to manipulate your credit scores right now. So ideally, you want to have your credit utilization below 30%. What is credit utilization? That is what is owed on your credit cards in relationship to what the limit is. So if you have a $1,000 credit card with a $1,000 limit, and you owe $500, you're at a 50% utilization. Ideally, you want to get that utilization below 30% to get the best bang for the buck or the best lift. Okay. Now, if you've had any late payments on a credit card, I always tell people, please do not pay it off right now. And I always tell people, please don't pay your credit cards off to zero. Leave a slight balance on there. I find that people are getting a slightly higher bounce in their credit if they have a little bit of a balance on their credit card versus zero. So for what it's worth, that's just what we're discovering right now. So keep a slight balance on it. Now, credit utilization, I find that this is an area that is changing in almost real time. And what I mean by that is the algorithms are rewarding people for paying down their credit cards now a lot more than they have in the past. It used to be where if somebody had a credit card that was maxed out and paid it below 30%, I would say, hey, you're going to get a good 20-point bounce out of that in 30 days. Now it's turning out to be a 40-point bounce. And the only thing that I can surmise, and this is just my opinion, is that the algorithms are responding in real time. And what I mean by that is credit card default rates are skyrocketing. So if you have the ability to pay down your credit cards in an environment where defaults are increasing, they're considering you a much better credit risk. As a result, I'm seeing people's credit scores shoot up 30, 40 points by paying those credit cards down, a lot more than I have in the past. Okay. So now that's just my small world, but I'm seeing that over the past 6 months. Okay. Third thing we want to focus on is length of credit history. So if you have any credit cards or loans or things that are sitting out there, don't pay them off prematurely. Don't close them out. Every now and then I'll have somebody that'll close an account out because they haven't used it in a long time, and they lose a trade line and their credit scores go down because they have less credit on there. So I like to work with what we have in front of us. So if you've got a credit card and it's on your credit report, it's reporting, you don't even know where it came from, because it happens. I look at my credit report, I'm like, I haven't had that card in years, haven't used it, probably should close it out. But I know if I do it, my scores are probably going to dip a little bit. So don't do it if you're thinking about applying for financing in the near future. The next thing, 10% of what goes into your credit scores is based on frequency of new credit. That's really not much we can do to control about that, other than don't apply for new credit unless we know you're going to get it. And then the last thing we want to talk about is the types of credit. Okay. Credit diversity is another thing that will give you a little bit of a bounce in your credit. So if you have a couple of credit cards, an auto loan, and maybe a personal line of credit, that is great credit diversity. You're going to get a little bit of a lift from it. So, I've got a couple of questions coming in. Appreciate it. I'm going to go back over it, and I promise you I'm going to answer all the questions at the end. Okay. So that's what goes into a credit score. Then now I want to go over How do we handle some of the big questions or the big baggage that really tends to haunt people a little bit? Number one is student loans. Student loans, just a big issue. And unfortunately, how they're being treated right now by the feds is just, the hammer's coming down. You're going to have to start paying your student loans. There's just no way around it right now. So I encourage people to be proactive, reach out, get some repayment terms. Try for an income-based repayment plan if you can. Sometimes if your income is too low, they may start you out at a zero payments. That's not good. You need to do something. So tell them, you know what, I'm tired of watching the interest clock tick on my student loans. I want to pay $10 a month. Okay. If that's always the best way. Start to pay something on it. If it says zero, we can't use that because it's not going to be zero forever. If you have a $10 a month payment, we can use that to factor into your loan qualifications. So if your student loans are deferred, it means that you're still in school, okay? That's not acceptable if we're trying to get a loan. We need to pull them out of deferment into some type of repayment plan. If your student loans are in forbearance, that's ending. They're coming out of forbearance and they're going to start pushing payments down on people. If your payments are in default, that's actually a pretty easy turnaround. And that just means that it's negatively showing up on your credit as you're behind in your payments or not making your payments. So the student loan servicing companies are becoming easy to work with on that. So if you reach out to them and say, hey, I didn't realize my loans were in default, I want to start making payments, you can set up an arrangement where if you make your payments for 90 days, they're going to flip it from being a negative on your credit to being a positive. So imagine, I just had somebody a couple of months ago, they were in default on their credit cards. They called up the company and they basically got the repayment plans in place. Once they made 3 payments, the servicing companies will take that negative and flip it right over. And when they do it, this person's credit went from a 550 to a 650 because what was a default or basically a collection on your credit report now just flipped over to positive, paid as agreed, 3 months. The key is you have to make 3 payments. You can't make them all up front at once. Some people try to do that, but you got to make 3 payments 3 months in a row. Okay. And then income-based. So like I said, income-based repayment plans, if you go that route, make sure that they have some type of payment, a zero payment. And they'll tell you, you know what, your income's too low. We can't take a payment if we do an income-based. Be animate about it. Hey, you know what? I need a low payment, but I need to pay you something. I'm not going to watch this interest clock tick forever. And they will set it up for you. You just have to be persistent about it. Now, with regards to repossessions, I run into quite a few people that have had repossessions for crazy reasons. Co-signed a loan for a family member that didn't make the payments. Bought a car off of a B lot somewhere. Car died a month later. Nobody's willing to do anything with it. And, you just can't pay for a car unless it's moving. So there are lots of reasons for repossessions. Depending upon how old the repossession is dictates what we need to do with it. Now, if the repossession is, over 5 years old, I'm finding some people are starting to get a pass on it. If it's 5 years old, you've got a new auto loan and you're paying that on time, and that was an isolated incident. I've had 2 people recently that did not have to pay off their repossessions. Their balances were in that $5,000 to $7,000 range. Now, if you have a repossession where it's $20,000, $30,000, that's a different conversation. Unfortunately, lenders do not like that. They're fearful of someone getting a judgment and liening the property. Okay, so every repossession is a little bit different. I would suggest reaching out to me, scheduling a call. Happy to learn your situation and tell you exactly what I would do. Sometimes, if it's a situation it's recent, you might be able to get some repayment plans on that loan, even though you may not have the car. So I'll coach people sometimes to, hey, let's get a repayment plan on that repossession, get you approved for a down payment assistance or grant program, get you into a house. What you do with that repayment plan after we close on the house, that's 100% up to you. I'm all about getting into the house and getting across the finish line. So no judgment with what you do on that financing afterwards, because I know it's usually the repossessions are for reasons other than you can't afford the payments, I guess is the best way to put it. Now, third thing, bankruptcies. There are two types of bankruptcies. There's a Chapter 7 and a Chapter 13. A Chapter 7 is when you wipe the slate clean. A Chapter 13 is when you take all of your debts, put them together, the balances are negotiated down, and then you pay it off over time. If you ever have a choice between the two, you want to try to go for a Chapter 7. Okay. Treat your personal life like a business. A business, if it has the opportunity to do a Chapter 7, wipe the slate clean, they're going to do it. Okay. I understand it may be it might be honorable to pay the Chapter 13 back over time and this, but I'm telling you, it's just not worth it. Chapter 13 is a long, tough road. I've got a lot of admiration for people that can run through a Chapter 13 because those payments are very challenging, and it goes on for 5, 6, 7 years, depending upon what the trustee works out with the bankruptcy court. So it's what the bankruptcy court issues, I should say. So kind of crazy how long of a road the Chapter 13s are. But when it comes to buying a home on a Chapter 7, we can't really do anything until 2 years after the discharge date for the down payment assistance and grants. There are some programs that could be 1 year, but if we want to tap into down payment assistance and grant money, it's got to be 2 years after the discharge date before we can do anything. The big thing is once you're done and once your bankruptcy is discharged, we want to build credit as soon as possible. It's actually very easy for me to coach people to get their credit scores up from below 400 to above 700 in 6 months after a bankruptcy if you follow certain steps. So we can reestablish, we can use different tools to get your credit rebuilt right away, because those credit algorithms know that you just did a bankruptcy. You just got to pass. So they're very forgiving. They'll bounce your scores right up if you pay things on time for 12 months. If you're late on anything in those 12 months, my opinion is you're going to get spanked harder. So do whatever you can to pay whatever you take out after that bankruptcy is discharged, whatever loans or credit cards, whatever you take out, do whatever you have to do to keep them paid on time. Now, Chapter 13, when you're reorganizing, you can purchase a house while you're in bankruptcy, provided you've made 12 payments to the bankruptcy court or trustee prior to applying for the loan. So once you're into that repayment system for a Chapter 13, you make 12 payments, boom, you can get a house with trustee approval. Unfortunately, after you pay the bankruptcy off, you need to wait 2 years. I know they're trying to change that, but that's just one of the odd things. So for Chapter 13, at least. Now, with regards to collections, please, when it comes to collections, make sure that you do not pay things off that are over 2 years old without thinking twice. If you pay off a collection account, let's say you've got a collection account. Actually, I had somebody yesterday that had one with a cable company and I think a cell phone company, and they were old ones, over 2 years old. Not big ones, they're probably $300-400. But if you pay those off, your credit scores will go down. So think of it this way. If you pay off a collection account that's over 2 years old, it's going to reactivate it. They're going to report it on your credit report next month as collection paid. It reactivates it and your credit score goes tumbling down. Okay? For that reason, I always tell people if it's over 2 years old, let it lie. We'll deal with it if we have to. Typically, what I would do is get you approved for the loan, and an underwriter with the mortgage company, that's the person that approves the loan. If the underwriter comes back and says, hey, I want this old collection account paid off, that's fine. We've got your approval subject to paying that collection off. Your credit's already been pulled, so the score's locked in. If we pay that collection off and it goes down next month, we don't care. Your score's locked in. You're going to be closing once we verify that collection's paid off. That's simple, okay? Now, If your collection account is less than 2 years old, we want to look at things on a case-by-case basis. First and foremost, if it's a medical collection, don't worry about it. They're not even supposed to be factoring into the credit scoring algorithms right now. Okay, so medical people are getting a pass on. If your collection accounts are 1 to 2 years old, we want to look at running those through a simulator. Okay, actually, right now I would say 6 months to 2 years old. We probably want to run those collections through a simulator. And all a simulator does is just goes, okay, if we remove this collection and or pay it off and it reports next month lower, that what's going to happen to my score? How much is it going to dip? Is it going to dip? It might even stay the same. So these simulators are becoming very accurate. There's actually a simulator on Credit Karma that's actually halfway decent too. So I'm not sure what tab it's under, but if you go, and it's not always, things on Credit Karma aren't always available on their mobile app. You'll find a lot of the mobile applications are a scaled down version of their website. Okay. So if you go to Credit Karma's website, you're going to find a more robust version that's going to be able to give you a lot more tools for you to make certain decisions and to start taking care of your credit. Now, if your collections are, say, 0 to 6 months or even up to a year, those are actually possibly worth paying off. If it's recent, if it's within a few months, we absolutely want to pay those off. Your credit scores will bounce back up. Okay, not to where it was, but heck, even if it retraces 50%, it's better than 0. It's not going to go down. Okay, so what happens is the algorithms consider those as like, oops, John realized the collection hit his account and he paid it right away. So, and as a result, your scores will go up a little bit. All right. Next thing I want to talk about, my steps. These are the steps or how I look at things to figure out how to get a quick spike in your score. So first thing we want to do is we want to get your credit reports. You can go to freeannualcreditreport.com. Okay. You can actually pay and get your credit scores from freeannualcreditreport.com. Make sure you're getting the FICO scoring models 2, 3, 4, 5 if they offer them. We want to look at the 2 highest scores, make sure they're, in the strike zone, that they're above 600. Okay. If they're not, then we want to focus on, okay, which scores are middle and which is the middle, which is the high one, and what can we do to push those scores up? Okay. We need to take a look at your credit profile for each one of those and identify some of those low-hanging fruit. We want to make sure that you've got at least a couple of trade lines. It could be an old auto loan that's paid off, credit card. If you don't, we have ways to add trade lines. But if there are trade lines out there, say a credit card, it's maxed out, great. We want to pay that credit card down. That's what I call low-hanging fruit. That's an easy, like I said, 30, 40 point spike if you're able to pay that down below 30%. If you're over your limit, wow, you could get a 50 point lift in your scores. Okay. So credit utilization is a big thing right now. The other thing we want to look at is what other things are out there. Are there late payments, collection accounts, things like that? So once we get a handle on those, then you can use some of the suggestions that I made earlier as far as manipulating those to get things bounced up. Now, when it comes to trade lines, typically you might need 2 to 3. They can be new, they can be old, and if we need to, we can add alternative trade lines. And I'm going to go over what alternative trade lines are in just a few moments. We can take a lot of the things and run them through a credit auditor if needed. If you've got some collection accounts, repossession, things like that, we can actually connect you with a lender that can run you through a credit auditor, which is more advanced than a simulator. And it's because what it's going to do, it's going to give us not only, the simulator is going to run scenarios based on what you tell it. The auditor is going to do an audit and give us suggestions of what we can do to get us quick spikes in your score. Okay. Now, if you need to add new credit, and this is where the alternative trade lines will come in, but there are ways to add credit right away. You can add secured cards, secured loans, or become an authorized user on someone else's account. Great tools that way. Now, if your scores are below 500, we might want to consider sending out some dispute letters. You can actually dispute things through Credit Karma lately, and I found that that's actually doing a halfway decent job. Certainly less expensive than hiring a company to do it because it's free, okay? So the do's, things that we want to do. We want to subscribe to a credit monitoring service. Credit Karma, Credit Sesame, Experian, those are credit monitoring services. They're going to tell you anytime you have a change on your credit. I have a lender that I work with, Belong Lending. They'll actually pull your credit. It's a full mortgage credit report with credit scores. They typically charge $70, but it will tell you everything that's out there, and they'll run it through a simulator for you to let you know how you can get a quick spike in your scores. We want to look at your credit cards, see if we can pay that utilization down below 30%. That's a big thing. If you had great payment history with your credit cards, you can also ask them to increase your limit, which will in turn lower your utilization. Another way to do it. Now, remember I said earlier, you can pay down your credit cards below 30%. Please do not pay them off, okay? So I was telling people, leave something on there. I had a couple of people over the past few months that once they paid their credit cards off, the credit card companies closed the accounts on them. And it's because they've been good on their payments lately, but a couple of years ago, they had a few late payments. So another reason not to pay the balances off. Now, if you have someone that is generous enough to add you as an authorized user on one of their cards, by all means, do that as soon as possible. Now, if you're going to open up a secured card, use that secured card right away. It forces the credit company to set it up in their records and get that data submitted to the credit bureaus as soon as possible. If you need alternative trade lines. Now, alternative trade lines are things that you pay on a monthly basis that don't report to the credit bureaus. It might be your rent, your cell phone bill, car insurance, subscriptions. There's a longer list I'll go through in a few moments. But what we can do is we can take statements showing that those things were paid, provide those to a third-party credit aggregator, and they'll get them added to your credit report. Okay? It sounds more sophisticated than it really is, but if you get 12 statements or 12 bank statements showing that you paid your car insurance, it's easy. There's a fee involved with it with the mortgage companies, so I find that they don't always lead with that, but it's a tool. If your credit scores are where they need to be and the only thing that's holding us back is a trade line, we've got solutions for it, okay? And if you have any collections that are over $2,000, we want to possibly consider setting up some payment arrangements. I say possibly because lately they're starting to let us go through, they're starting to issue approvals with some of these collections on there. So I would let me connect you with a lender first, let them pull your credit, let them put you through their automated system for a mortgage approval, and then that will spit out whether or not we need to deal with the $2,000 or not, okay, as far as doing all repayment terms there. Okay, the things that we don't want to do. We don't want to blindly just apply for credit, okay? If you go out to some of the free platforms, it's going to tell you, like Credit Karma, they'll say, oh, you've got a 80% chance to get approved for 3 credit cards. You click on all 3. Now you've got 3 inquiries on your credit. It's just, don't do that, okay? If your credit is borderline, if you go for a secured card, you're 100% going to get that, okay? But if it shows up on your credit, you've got all of these inquiries, not only is it going to pull your credit score down a little bit, it's going to show, wait a second, John's got all of these inquiries, but no new credit issued. Is there something that we're missing? So the underwriters get a little bit more skeptical with regards to the approval if there are a lot of inquiries and no credits issued. So they may look at your file a little bit more deeply. So we only want to apply for credit that we're sure to get. And typically that's going to be like a secured card. And I know I've said this a few times, but I said it in the beginning, I'm going to hammer it home. Don't blindly pay off your collections. And the reason I hammer this home is without fail, this trips up a couple of people a month for me. So if it's over 2 years old, leave it alone. If we have to negotiate it after your approval, we'll do it. If it's less than 2 years, on a case by case, we'll deal with it. Medical stuff, just leave it alone. 1 to 2 years old, we'll run through a simulator, and 0 to 1 year old, we want to actually consider paying that stuff off if at all possible. Okay. Now, don't pay off your credit card balances. Like I said, pay that utilization down. Don't pay off loans. If you have an auto loan with 2 or 3 months left on it, do not pay it off prematurely. Okay. We don't want to lose that trade line. Not only lose the trade line, but your credit scores could go down if you have what they call a thin credit profile. Okay. I had somebody a couple of months ago that paid their auto loan off by mistake, and their credit scores went down 30 points because they had one less line of credit active. Okay. And don't become an authorized user on a brand new account for a credit card or an account with any late payments. And by all means, I'll say never employ debt consolidation services. These companies are surfacing right now, and the reason they're surfacing is because people are falling behind on their credit. Okay? These companies are, as much as they're called debt relief, so it doesn't matter. They are not your friend. They will ruin your credit. If you are in that bad of a spot where you're looking at debt consolidation services, I always tell people you're probably better off going through bankruptcy and at least have the protection of a bankruptcy court. Because this is what happens. The debt consolidation companies, they're advertising on TV, debt relief this, debt solution that, and you call them and they'll go, oh, great, we'll negotiate all your balances down. Stop making your payments right now. And then tell all your creditors that you're now working with debt solutions. So what happens is, whatever the credit consolidation company is, they're going to be in contact with your credit card company, or so they say. So what happens is you make your payments for the foreseeable future to the debt consolidation company. And then they're supposed to take the payments and forward them to all of your creditors. So what they do is they collect their fees up front. So if let's just say your credit cards are $500 a month, and debt consolidation company ABC says, you know what, we're going to negotiate these down to $250 a month. Send us the $250 a month and we'll pay them. Well, what happens is, they might have a fee of $3,000, $4,000, $5,000 or whatever it is. They're going to collect that $250 a month, and they're going to pocket it and put it right in their pocket for the first 6 months. All of that money is going to them. Your creditors get zero. And by the time your creditors have just about had it and about to sue you, that's when they start dripping the money out to your credit cards companies. They know it. They do it all the time. So, now, as soon as you do the debt consolidation services, every one of your creditors is going to put right on your credit report in debt consolidation. Now, when you go to any other lender now, they're going to go, wait a second, John's in debt consolidations. They consider that just like you're in bankruptcy, and no one issues you credit. And what's worse is you're going to be treated like you're in bankruptcy without the protection of a bankruptcy court. That's crazy. So for those reasons, I dislike the debt consolidation industry. So keep that in mind, and they're going to get louder as the economy changes. Okay. Now I want to give you some of the credit building tools. These are the tools that are available for a quick lift on your credit, in your credit scores. First and foremost, if you don't have a credit card, I always tell people, go get a secured credit card. I think Capital One does a very good job. Someone just told me they got one for $200. I didn't realize Capital One did something below $300, but I guess they'll go down to $200. And what it is, you send them $200 or $300, they're going to send you a credit card with a $200 or $300 limit. Okay? It's important you use it as soon as they send it to you, so it forces them to get it set up in their system and report that data to the credit bureaus. You're going to get typically a good 20 to 30 point bounce over 30 to 60 days by opening that up. Okay. So Try to keep the balance below 30% if you can. There are ways, if money is tight, and I don't know what your household is like, but mine, there's never any extra money. Life has a way of getting in the way of those plans. But what I recommend is, if it's tight, once it gets set up on the credit bureaus, and you can see this right through Credit Karma, click on whatever the debt is, it's going to tell you the reporting date. So do the best you can to have your balance paid down below 30% a week before the reporting date to the credit bureaus. That's one of the high-level techniques that I teach people to manipulate their credit scores. So think of it this way. If you have a Capital One account and Capital One reports it to all three credit bureaus on, let's say, the 15th of the month, on the 7th or 8th of the month, we want to make sure that we pay that balance down below 30%. Then, once it reports on the 15th, I go and check my credit scores. On the 16th, you're going to see that the credit scores are going to shoot right up. Then on the 16th, if I need to go buy groceries with it, I can. I just need to make sure that next month before the 7th, I'm paying it right back down. So that's a way to kind of game the system, for lack of better words, when it comes to credit card debt. Secured loans. There are personal loans and secured loans that are just great tools for building credit. I actually bank with a local credit union called Michigan First. Okay. I love what they do for their users. They are all about helping the underserved communities, and I really do appreciate that. It's hard to get somebody on the phone there, so they're not perfect. But if you have a branch nearby, great place to do business with. They have one of the best credit building tools, and it's called a secured personal loan. It's called their secured loan. So what it is, and I don't know that, I know there are a couple of credit unions that offer this, but if you're in southeastern Michigan, I highly recommend this one. What you do is you give them $525. Okay, they charge $25 to actually set this up, so that's gone. But they take the $500 you give them and they put it in a savings account and lock it down so you can't use it. But they're going to give you a loan right away. They're going to put $500 in your checking account, so you're getting the money right back. But what happens is you got to pay that $500 loan off over 6 months. So they're going to take $80-something a month out of your checking account to pay it off. What's great about it is that, one, they report this to all three credit bureaus, and they report it as a personal line of credit, which is one of the hardest things to get. So what happens is your credit scores are going to bounce, in my opinion, 40 to 60 points in about 45 to 90 days. So it usually, the first payment, it'll go up, I don't know, maybe 30 points. That second, third payment, bam. That's why I say 45 to 90 days. Okay. Great tool. The only downside with it is after 6 months, it's paid off and your scores will drift down a little bit because that trade line is paid off. You just do another one. Okay. But great credit building tool, and that's available through Michigan First Credit Union. If anybody wants any details on it, happy to actually go to the website and direct you to it in our Q&A area. Next thing, authorized users. So if you have a friend or family member, they've got good credit card with a low balance, good payment history, why not ask them if they can help you out? Now, you're not asking for money, so it's not as uncomfortable a conversation as asking for money is. It's actually easier when you think about it, not because I always tell people to do it this way. Maybe go to a friend or family member and say, hey, you know what? I've just got pre-approved for a loan. It's subject to me adding another trade line to my account. Is there any way that you could possibly add me to a credit card? So my name will pop up, and it will pop up on my credit next month. I mean, who wouldn't want to help out a friend? I don't need the credit card, and I don't need any money. I just need you to make a phone call and add me to the card. So it's not that bad of an ask. So I find that maneuver works about 90% of the time. Now, I say 90% because technically, the credit card companies were supposed to put in ways to block people. Well, not block people from doing it, but blocking the effectiveness of what an authorized user does. Now, it used to be where people did authorized users all the time, and the credit card companies caught on to it, and they changed it so the reporting data that goes on your credit report will show that the account opens the date that you're added to it, which doesn't get you nearly as much of a lift or spike in your credit. But what I found out is that most of the credit reporting companies, that's a manual entry and they don't do it. They'll give you the open date of when the card was originally opened 90% of the time. So your scores are going to get a much bigger lift. Okay. Just think of it this way. When you call the credit card companies, those people that answer the phone, they're timed for every phone conversation. So their goal is to get you off with as much customer satisfaction as they can as quickly as possible. So they will add people to credit cards and not go in and take that start date and manually input it. So as a result, I find that people do 90% of the time, it comes out to be a great win. I actually had a young lady, and this would have actually been a year ago, who grandma added her to a Sears card. And who the heck would know that Sears cards were still out there? $20,000 limit, few $100 balance. She still shops at Sears online, I guess. I don't know how, but impressive that the open date for the credit card, once it hit the granddaughter's credit report, was before she was even born. Crazy. So, but she actually got a 100-point lift out of that because the credit card was opened in 1976. So anyways, good story there. Now, alternative trade lines. These are the things that we can get statements for and have them added to your credit. Things like rent, auto insurance, P.O. box payments, storage unit payments, cable bills, cell phone bills, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym memberships. Okay. Now, every now and then, I might have someone that doesn't have any of these things. If that's the case, I have a fix to take care of that using this technique. So, but for that, please give me a call. There are a couple of ways to add some alternative trade lines to your credit that I'm happy to discuss. But we can get these things added to your credit, take it to the third-party aggregator. They'll put it up there. Usually just takes 48 to 72 hours. Credit monitoring services. There are a few out there. Credit Karma, I know a lot of people in the mortgage world don't like it, but that's more because the algorithm isn't the same as they use for the credit scores as the mortgage world, but I like it because it's free and it gives you a lot of data. So I'm all about free. So I'm all about you not giving your social security number to too many people, okay? There's no sense connecting you with a lender when you and I can navigate Credit Karma to figure out the likelihood of what your approval is going to be. Okay, so there's no sense connecting you with a lender to hear no or whatever. I'd rather you and I deal with it directly, work through it, and then only send you a lender when the likelihood of approval is 90% or greater. Okay, so I've been in that your side of it many times. So I just don't feel like it's something worth doing. I think there is enough tools at your fingertips where you can have control over this and learn. So, like I said, Credit Karma, great tool. Every now and then it's kind of quirky. If you get locked out of Credit Karma, I get it. It's kind of a pain to get back in. There's a competitor to Credit Karma called Credit Sesame. So keep them in mind. And then Experian. Now, Credit Karma, I like it. It's going to cover Equifax and TransUnion. Okay. And then Experian is going to cover Experian. So that's going to get you all three credit reports if you don't want to go through the annualcreditreport.com maze to get your credit reports. Okay. So it's important that you have access to all three. Credit restoration companies, I'm not such a big fan of them anymore. You're not hearing them nearly as much because their worlds are being challenged in a large way. Number one, you don't get the personalized service, and everybody's credit's different. Okay, there's Lexington Law, which I think is actually their fees are up to $200. Somebody informed me the other day. So, and they weren't getting a lot of service for it. And then there's National Credit Care, which I think actually just rebranded their name from a lawsuit. So the credit restoration companies are changing quickly, and it's because they're just not nearly as effective as they used to be. They typically take advantage of the Fair Credit Reporting Act loophole that says that they can challenge things on your credit as being incorrect, and then the credit furnishers and the actual credit agencies have only 30 days to respond to any of your challenges or requests for corrections. And it used to be where they just couldn't meet that timeline routinely, and as a result, they'd have to just remove the stuff from your credit. Now with technology, they're able to meet the timelines, and they have artificial intelligence that reads the letters. And if the letters are all the same, in other words, if Lexington Law is doing 10,000 letters a month on behalf of 10,000 customers, and they all formatted and look the same, what's happening is the credit bureaus can deny your request as frivolous. And they'll send you a letter that says, hey, we feel as if you might be employing a third-party credit repair company, and we question whether they're doing it under the legal, they're acting in a legal way doing this on your behalf. Please contact us. And it actually looks very intimidating letter. I've had a few people forward them to me. So these companies are, as a result, being stonewalled by the credit bureaus. So I find that you're better off just doing it through Credit Karma. Now, if your credit scores are below 500, there are some letters that you can draft on your own that can be very effective. So feel free to reach out to me, and I'll try to connect you with those as well. So there are the credit restoration companies. Now, where do we go from here? I always tell people, please schedule a call with me. Or, let me give you here is a link to my calendar to schedule a call. There we go. And let me go back here. And also, I need to get you a link to, if any of you are just going through if any of you are going through YouTube, Facebook, and stumble across this, feel free to go to my webinars where I teach people how to purchase with very little money out of pocket using down payment assistance programs and grants. You can reach that at nodownpaymentrequired.org. So with that being said, I'm going to open things up to questions. And let me make sure I get got that in there. Let's get back here. Someone's asking, how do I get a one-on-one with me? And appreciate that. Schedule a call, nodownpaymentrequired.org. I'll give you my cell phone number, 248-252-7283. I'm a phone jockey. I'm on the phone all day with people. So that being the case, if I'm not available, please leave a message and I'll call you back in between calls. I do get a fair amount of people that have to reschedule calls during the course of the day. Life just gets in the way of everybody's plans. I understand that. So shoot me a text. I'll call you at my next available opportunity. Great. iPhone, thanks for scheduling it. What about company credit card in my name? Hey, that's a good idea. If your company, I don't know if company credit cards will fall under your personal name or not. Not a bad idea. I haven't really thought about that one before. That could be a good technique. Please let me know if that's something that works for you. That's interesting. I'm always looking for new tools, and there are all kinds of tools online. Okay. There's self-credit. There's all kinds of credit out there, tools out there. So some are better than others, but I always tell people, if you're out there looking for different tools to use, online, just try to find out how many credit bureaus they report to. That tends to be a big thing. Someone's asking a question. Why do different credit score apps show different scores? Which app or score should I focus on for a home loan? Okay. So when it comes to credit scores, there's no shortage of algorithms that generate credit scores. The mortgage industry is the only industry that's standardized, where they look at the FICO 2, 3, 4, and 5 scoring models. For example, you go to the automotive community, there's hundreds of scoring models. Now, if you go to like Credit Karma, Credit Sesame, Experian, those free platforms are going to have their own scoring models. I find that Credit Karma, just because it's the big boy in the room, Credit Karma scores are typically coming in about 20 points higher than the FICO 2, 3, 4, 5. Now, that's not a guarantee, because if you have a thin credit profile, it can swing even more dramatically. Every now and then I'll have someone with a thin credit profile is showing a 620 on Credit Karma, and it might be a 520 on the FICO. And that's just because they have a thin scoring a thin credit profile. Good. Someone's asking a question. I have a company credit card that's in my name. Not sure if it's impacting my credit. I would go out to Credit Karma and check TransUnion. Well, and Equifax are the two credit bureaus that are going to pop up on Credit Karma, and then maybe go to Experian and see if that credit card's populating. I don't think it does, because it's probably under the tax identification number for the company that issues it, but you never know. So, good question. That's one I don't know. So, any other questions out there? All right. What I want to do is give you, here is a link. Let me get it back out of here, and let's go. Here is a link to my webinar. Putting it right in the chat box. Great. And let me go out to my Facebook friends. Sorry, it's hard for me to see questions out there. I'm going to put it out there as well. Facebook and YouTube friends. And then I'm also going to add the link to my calendar. So if you have any questions, please schedule a call with me. Always happy to go over your individual situation. Oh, also, if you have any friends or family members that need help, please pay it forward. I'm all about helping the masses. And let's get back here. Sorry, I'm running solo this morning. Nobody wants to work on a beautiful Saturday. I can't say I blame them, but I think you can tell I enjoy what I do. So always like showing up for these. Okay. Well, it's a little after 11 a.m. Any other questions before we break today? I'll give you my cell phone number one more time. Oh, here's a question. Are there any free apps to check the FICO? Not that I know of. Check the Experian. That one might offer Experian.com. I haven't played on that one a whole lot. I'm not sure if that one offers the FICO score or not. So, but you can always go to Credit Karma. I mean, it's a good baseline to work off of. And depending upon where your credit profile is and how thick it is, and feel free to schedule a call with me. Happy to walk through it with you. So I can usually get a good gauge with what you have on your credit report and what the payment history is, and whether or not the Credit Karma score is accurate, or I should say is close to what a FICO score might be. Hope that answers your question, Nicole. All right, let me get my phone number out to our Facebook friends and YouTube friends, 248-252-7283. All right. You know, another thing I want to put out here is a link. I'm finding that there are quite a few people that are looking for access to, there it is, our app. And here it is. Put this in the chat box. There is a link to our app on Apple. And here is a link to our, and this is the app where you can enter your address and determine what programs are available for you with no money down. So if you go out to the Play Store, it's going to be under no down payment. And it'll give you a feel. This is where it'll take you to. Is check your eligibility. Here, I always like to put in the house I grew up in. 168. It's actually 16801. There it is, Lamphere, Detroit, 48219. 22 programs are currently available in Detroit. Actually, I had one. It's crazy, all over the country. I just did a search for somebody in Miami. Let me go out to here just to give you a feel for it. I couldn't believe how much money was available in Miami. Let's try Redfin. And there's Vegas, but let's go back to here. I always like to, there you go, Miami, Florida. For sale. Crazy how prices are all over the country. I hate to sound like the old guy, but it's just absolutely crazy what little you get for your money. Here, let's take this one. $850,000 in Miami. And I know that's a lot of money, but I show you this because the amount of money in down payment assistance in areas of the country, it's crazy. LA was 150. New York was 250,000 in down payment assistance money. But here's one in Miami. $33 programs. I'm going to enter my information just to kind of give you a feel, and see when that email comes in here. And this will be what you will receive. So yeah, look at this, Miami. Crazy. 33 programs for down payment assistance, $200,000. Can you imagine? I know $800,000 is a lot for a purchase price, but the fact that they're going to give you $200,000 towards a down payment assistance and grant and closing costs, that's a lot of money. So, anyways, in the Detroit metropolitan area where I'm located, routinely right now there's a program that's offering $30,000. So 100% will cover all of your down payment. Whatever's left over will cover your closing costs. Any people that are actually inside the city limits of Detroit, there is a Detroit DPA or down payment assistance program that's offered $25,000 the past 2 years. There is chatter that program is going to be surfacing again. And this time I know the money is going to go extremely quickly. Okay. So I'm telling people, please reach out to me. I am compiling a list of people that once it's launched, I'm going to register everybody for it. Okay. So I find that is going to be a race once it's launched, but the chatter I'm hearing is it may not be till September, October. So, and that's in line with the past couple of years. So, but that $25,000, we can use $20,000 for the down payment and $5,000 for your closing costs. That particular program, you only need $1,000 out of pocket to actually buy a house. And as long as you own the house 3 years, you get to keep the whole $25,000. And what's even better is there are no credit requirements for that program. So last go around, I had people, at least 4 or 5 people that had credit scores in the mid 500s that qualified for it. So that is just amazing in my mind. So, so if you ever had dreams of owning a home and you're looking inside the city limits, now you do need to be a current resident of the city to qualify. Okay. But that is absolutely amazing transaction. So someone's asking a question, can you stack grants? Yes, you can. So, and I cover that in my webinar. I've got a few people that I've worked with where we were able to take some of the grants here. I'll actually show you a couple of people that were wins there. Let's go to, sorry to bounce you around here, but here's my last webinar. And just to give you a feel of some people that have stacked grants. Here's one, Emily. She was able to do the $25,000 from the city. We were able to stack a 3% gift program, which was a grant. It was free money on top of it. Another $5,000 on top of that for her closing costs and $500 to cover her appraisal. All in, she qualified for $33,134. Just absolute crazy amount of money. There is another person. Let's see where, oh my gosh, where's Emily? Anyways, there are several people that were able to stack it. Now, the best way to when we start stacking the grants, you do need to have your credit scores in the higher 600s to really, what I say, run the table and grab all of that money. Okay. So if your scores aren't that high, don't wait around. Okay. I would say 25,000 in the hand is better than trying to just try to dot the I's and cross the T's and grab 5. For 33, I wouldn't focus on that. Focus on the 25 and grab it before it runs out. Okay. So, and that's with a lot of these programs. Okay. These programs they don't run forever. They're coming and going. Okay. And right now they're going more than they're coming. So I always tell people it's a bird in the hand. If you can get yourself into a house with very little money out of pocket, and it's the same price or lower than what you're paying in rent, don't horse around with it, okay? Trying to stack all the grants sometimes can be a little bit, don't get me wrong, if it lines up, we're going to do it. But to try and wait and garner all of those things, you could lose out on other opportunities, okay? So, because like I said, they aren't around forever, all right? But great question, iPhone. Thank you for asking. Any other questions out there before we call it a day? All right. Well, thank you so much for carving time out of your day. I know it's going to be a beautiful weekend, beautiful Saturday. Hope you're able to get outside and enjoy this beautiful weather. It's long to do with a lot of the rain and heat that we've had this summer, kind of a crazy summer that way. So, and please take me up on my free call, strategy call. Whether your timeline's 2 weeks, 2 months, or 2 years makes no difference for me. I've been doing these quite some time. Actually, I've been doing these webinars for over 3 years now, and I've been coaching people on tapping into these grant programs for over 10 years now. So once I found it, this has been my calling. I love what I do. So I'm always happy to learn everyone's situation and see what I can do to get them on the path of home ownership. And regardless of whether your credit's, 500, 600, doesn't matter to me. I just love helping people, and it's doubters. Without fail, there's always a couple of doubters that question whether we can do what we can do. And so I actually get very prideful as far as helping people across the finish line then. So anyways, I hope our paths cross again real soon, and hope that everybody enjoys their weekend. So thanks for attending. Take care. Goodbye.